Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
Welcome to Sound Economies with Mel and Peter, an East meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. So, hello Mel, how are you today? How's your week been so far?
Hi, Peter. First week of December, so it's a lot more cheerful here than the previous month. So it's been looking great. We have a lot of exciting economic spotlight articles underway. How about you, Peter? How's been your first 4 days of the week so far?
Yeah, it's fine. December is always very busy for us actually. So it's basically until Christmas.
Right.
Different duties. We have some advisory duties. People want, of course, everything to be done before we close the books and go to
Correct.
have a well-deserved holiday. And then, the markets, political happenings, very interesting, and actually also
Mhm.
our funds are very active. So we just did a new investment in our, our new defense fund. So a lot of things, a lot of exciting things. Well,
That's great.
otherwise, today, as mentioned, there's a lot on the plate actually. A lot of things going on. So
Mm-hmm.
no slowdown, sort of December slowdown. And we will come across a lot of things, actually starting with a large corporate, Nippon Steel
Mm-hmm.
in Japan. And we will jump to the UK stock markets. Some interesting numbers out from that area. And of course, we need to touch South Korea, and also actually maybe some linking to Japan again.
Mm-hmm.
And also, we have covered France and Germany lately. In particular, sort of the political situation, of course, also the economic outlook. And France and Germany is, I would say, almost unfortunately, on the agenda again, with France losing their government yesterday, basically, yesterday evening. So, yeah, a lot of things. And then we, of course, end up with our global outlook as always.
Yes.
Yeah, well, Nippon Steel, what's going on there?
Right. So, Peter, a few weeks back, Japan's Nippon Steel, so that's the fourth largest steel producer in the world. Uh, they're in the process of acquiring US Steel. So it's their counterpart in the US, but obviously not by a big of a scale. Um, but Trump said, at least now that he's counting down to the day that he's president again, he said he will block this acquisition deal between Nippon Steel and US Steel. And it's all part of his protectionist play, right, towards trade. But what I see from here is it's very interesting because it sends a lot of spook to the markets when it's not really as big as what maybe Trump thinks about the US Steel. So US
Yeah.
Steel, of course, produces 20% of local steel supply. But
Mhm.
in the global context, it's just 1%.
Yeah.
Um, China remains to dominate the steel production, at least in 2023. And Japan is top three. But Nippon Steel is also relatively small in the global terms, at about 2%. So in terms of blocking this deal, it looks uh, more on paper about patriotism more than anything, like in terms of competition, because US Steel is such a small player globally. It could be a market leader domestically, but especially when it's a $14 billion deal, I believe, and that's big as far as supporting more jobs and expansion in terms of US Steel's production. But in the name of protectionism, he's letting that go. So it could scare investors away more than do better in terms of deepening or protecting U.S. producers. So
Mm.
another take on that, on the whole trade protectionism thing apart from tariffs. So it's a nice, it's a very interesting detail that should be monitored also.
Yeah, exactly, and it would be difficult for maybe for Trump to take the office. And the first thing is that there's a Japanese company buying an old US gem.
Mhm.
Um, if Trump is, yeah, he's not that young any longer, yeah. So he's grown up in the period where the U.S. automotive industry was really, really, really big, and
Right.
U.S. Steel at that time was an enormous company. It was a industrial gem, so to say, a
Mhm.
fine, fine company. That's how he's grown up. So he represents something, but as you say, this is more symbolic, yeah, that he's
Correct.
blocking, yeah. But for the investors, global investors, there's a warning there, as you say,
Mhm.
because if sort of cross-border M&A activity, in particular in and out of US, is getting limited, then that is actually no good sign for global stocks, because M&A activity is actually sort of one of the drivers behind, in particular when the stock market is going up. Yeah. So just, yeah, as you say, another small note that um, these things are limiting
Mhm.
on the upside for global stocks, actually, if we look into the next 12, 18 months. So we note it, and that's why we have it on the agenda today.
Right.
Uh, yeah, so very, very good point, yeah, actually. But anyway, let's turn into a bit of sunshine. We like sunshine in the markets and in this podcast. And that was
Mhm.
actually numbers coming out, or data coming out about the US stock, sorry, UK stock market, United Kingdom, for November. And in November, it was the first month in 3 years there was a net inflow um, of capital to UK stocks.
Three
And
years.
yes, 3 years actually, and that is not is as how to say it in terms of turnaround or something. It's hard to say. A big thing. It doesn't mean that we advocate that people should rush out and buy sort
All
of
UK
or
stocks. No.
in the world. Yeah, but still not a bad thing. And we have discussed the new PM in UK and the new government, and they've been a bit unlucky in different ways, but after all, they managed to get a budget, and also a budget with some visions. They do some changes, and it seems that the society in UK is okay. Business will pay a bit more. They're okay with that. So actually, they're moving a bit forward. Yeah.
Mhm.
And that is important for investors to have some direction, and so we know where we're heading. And it also is fine in line with what we have been talking about now and then, that within Europe, we like to overweight UK stocks a bit compared to the particular Eurozone, yeah. Still on the global allocation, we underweight totally Europe. But anyway, within Europe, we actually prefer UK, and this is actually, we just see it as a confirmation and
Yes,
a
correct.
sign for, yeah, small uptick there. And worth to watch out for also in the new year. We will be entering soon. People are looking
Mhm.
out for what to do. So yeah, it's a good thing.
Mhm.
Um, and as mentioned in the start, as we need to touch base on South Korea. So
Right.
Mary,
Very
tell us
interesting.
what's cooking, what's going on.
Yeah, right, Peter. So let me speak in Asian time zones when I explain this because
Yeah.
it was really shocking for us here. Like, so we get the news on Tuesday night that South Korea's president declared the martial law about 10, 11 p.m. their time. And then everyone's worried, like, what is happening? We don't hear anything about like domestic unrest or stuff like that, which is usually what triggers martial law, right? And then we wake up the next morning to the news that, oh, it's been taken back. So it's quite a roller coaster ride. So far I've seen the Korean stock exchange performance is down 2% between the last 3 days. The one has depreciated while 1 year bonds have gone up. So indicating a lot of uncertainty as far as the financial markets are concerned. It's also not a good development considering that everyone's so jittery about the global developments, right? As we
Mhm.
mentioned, there are issues in the Eurozone. Of course, there's this scare about how Trump will carry out the tariffs by
mm,
January, as he promised. So it's it's been a tricky situation as far as South Korean assets are concerned. But the I think the key
mm,
difference that the 2% is pretty soft relatively compared to the
yeah,
shock of martial law in a
yeah,
mature economy. And I think the key difference is that the Bank of Korea, so their central bank and the Ministry of Finance, came
mm,
together, held a meeting, sat down, and said, we will provide liquidity to stabilize
mm,
the stock market. And they even said
mm,
they could do 10 trillion won. Or another report would cite that they're ready to deploy unlimited resources just to smoothen out that initial price shock. So that's maybe that's the cost of calming the investors, but
yeah,
it has certainly paid off. And now it's noise but as far as the market, it has quite stabilized, and it's now more of a political issue. So they're now discussing impeachment for the president, but the direction of stocks seems to be picking up, at least from versus yesterday's response.
yeah. It was a sort of an unbelievable overnight happening locally, local time.
Right.
So the finance markets didn't really actually have time to react negatively. Obviously, sort of as an unbelievable uh, sort of action from a president to save his own skin. Apparently,
Yes.
um, this is where reality go beyond fantasy. As a sort of, if you've written a book where this will say this is happening in the book, they'll say okay, it's hopeless fantasy, yeah. And that is it's amazing that this can happen. If we should conclude, are we good, so to say, saying okay, we think the situation is back on track, and we're not concerned, or what is our conclusion?
Right. You were right. It's like a Korean drama that came to life with this plot twist, right? But as
Yeah,
far as our view towards Asia, the quick recovery of the markets and the agility of their authorities in terms of responding or calming the markets,
mm,
it shows that Asia, at least Asian economies like South Korea, have uh still has this elbow room to respond, and
mm,
um and the quick recovery of at least just a couple of days or maybe a day, a trading day, shows that there's still enough momentum to carry the assets over. Like, there is
yeah,
an initial shock for sure. We've seen that
yeah,
in Japan as well, but now they're pretty much stable. So any of course, any political episodes like this would upset the market initially, but over time, there's this calm that settles in because
yeah,
underlying economic conditions are okay. And then there's domestic demand or regional demand is strong despite some uncertainties abroad. So it also, in a way, confirms your view that we're still overweight towards Asia.
yeah. So we think life is back on track, and we are happy, so to say.
Mm-hmm.
So we can say that democracy won, luckily.
Mm-hmm.
Do we have further sort of Asia implications, Japan, or is the world sort of in Asia okay, Mel? Or
I
yeah,
think Japan has been through the toughest times as far as political issues are concerned.
yeah,
I've seen that while the prime minister did not get the majority, it's not like the situation in Europe that we'll discuss in a bit, where they lost the government. So they're trying to work through it, and I've seen that the yen has somehow recovered from its weak points in November.
yeah,
So yeah, it's probably gonna track how that's how Korea will probably perform in the next few
yeah.
days. So there was this initial drop, but it's gonna stabilize sooner than later.
Good to hear. There's a lot of politics actually, and normally sort of in the financial markets, always been so that politics is there,
Yes.
but it's sort of say that the financial markets and sort of the political life, they are living sort of side by side. In particular, during the past 2 decades, the politicians have taken more and more of the detailed work in life over, instead of creating frames where business life is just acting within this frame. There's more regulation, and the politicians plays a bigger role in what means something for investors, taking a part of our every day in another way than they should do. Politicians are really are in the limelight currently, and and the same is the case here in Europe. Right now, the biggest, so to say, unlucky battleground is France.
Mm-hmm.
Uh, Yesterday evening, European local time, the French Prime Minister lost the confidence vote, basically the government.
Mm-hmm.
Uh, that means that there is no Prime Minister right now, and where they lost the confidence vote is actually one of the most important decisions every year. That was the budget. So there's no budget for 2025. The way it works in France is that they simply copy paste and
Ah,
say that
yes.
the budget from the prior year rolls on, and
Mm-hmm.
that is one of the catastrophes seen from investor perspective, because
Correct.
this year the French deficit will be 6% of GDP.
That's pretty
It
big.
is outrageous lot. It is alarming high. France already have been downgraded
Yes.
several times, yeah, because this is not a one-off. This is an ongoing problem. First of all, France has had budget deficit for like 30 years, 3 decades,
Mm-hmm.
and that means that there is given stimulus to the economy in a way that tweaks the economy in the wrong way, because it ongoingly keeps unhealthy part of the business or of the economy alive, at a cost for, how to say it, the profitable parts of the economy.
Mm-hmm.
So that is bad itself, but in the under Macron, the yearly deficit has grown. And it's not so they say, okay, we take a lot of money, spend on investments or spend on reforms, spend on something that will change the economy. And not at all. It is simply just the economy and the budget getting out of order,
Uh-huh.
and more order every year. And now it has gone up to 6% this year, probably. And they also, in a negative way, beat the forecast every year, so they come out with a bigger deficit than expected. As it's completely hopeless. And
Outdoing themselves every year.
yeah, that's fantastic. So this is a big risk in the European bond market. There is nervousness about the French government debt, and there should be, and it is right so. That is the situation right now. Macron, he missed us. He's on a visit in Saudi Arabia, but maybe on the way home. And the first reaction is everything needs to look good on the outside, yeah. So he
Mm-hmm.
wants a new prime minister before the weekend, because in the weekend Trump arrives. He's he's he's
Oh.
he's arriving to celebrate that the big cathedral in Paris, Notre Dame, that burned down.
Ah, yes,
It's
yes.
getting reopened this weekend. So the whole world is there, and
Oh
Macron,
no.
he now want a new prime minister too, so he can showcase that everything is good. Yeah, it's a bit sort of hopeless. And it's a bit, behind the scenes is of course a big domestic political play going on. Marie Le Pen, she wants to
Yeah,
force
I've seen that,
President
yes.
Macron down from his position. Yeah. It's a very costly game on behalf of France. We can only say we share the concern among investors, but we have been concerned for many years. It is why we have argued to underweight, and we see Southern Europe, and we've said it so many years, it is
Mm-hmm.
uninvestable. Yeah, it's amazing. France is the second biggest economy in the Eurozone, the third
Yes.
biggest in Europe. UK is number two. And then we have Germany. Um, Again, also political problems. Uh, we all know that plans, everything is a bit more planned in Germany. Yeah. So that's it's yeah, it's just how it is. Yeah. So the confidence vote will happen here in mid December, and we all know that the German government will lose the confidence vote, and
Yes.
then there's the election. Yeah, yeah. The political campaigns they have officially started. The election campaigns have started before the confidence vote has been done, and and the election will happen in mid February. Um, but the thing is, despite everything, it's a bit more sort of a controlled meltdown. Nobody, also if you look into the current political debate, nobody comes up with true reforms, true reform ideas, how to move forward. The only discussion is, can the public deficit grow more than sort of allowed?
Uh-huh.
And yeah, that is simply the only discussion. So more debt in Europe. And if we look into what has happened the last 15, 20 years in Europe, is that debt has exploded, public spending has exploded, and the German economy is in a hopeless shape. Not alone is it a zero growth economy, but it is not positioned for moving forward. And the same is actually the case for rest of continental Europe. So just to say, okay, we could ask a child, would it make sense to do the same as we have done for 15 years? Everybody would say no, but that is the only thing that is discussed also in among German politicians today. So the outlook, and that is the worst. The outlook is um, more of the same, and
Mm-hmm.
and, and it is, if we are talking about a leading economy in the world. But that's how it is, and
I was
I
wondering, Peter,
yeah,
just to circle back from our first discussion on the
yeah.
UK and stock inflows or capital inflows, is it the case where one of the reasons why investors are coming back to the UK after 3 years is that they're seeing that it could be worse somewhere else? I mean, investing in France and Germany, for example, we've talked about repeatedly how hopeless, how bad the local situations are have developed so far.
There could be a small move, as you say, away from the continent or out of the eurozone, also towards
Mhm.
the UK. It's big, no, but it could be more significant. Yes, I trust. As I speak about how bad things are in Germany, the stock index, the leading stock index, the DAX, is taking into new highs. Yeah,
Mhm. I've
which
seen
you would
that,
say
yeah.
it's fantastic.
It's
But of
puzzling,
course,
yeah.
yeah, yeah. But it's global companies that are typical in the index. Yeah, but still, they have even the very large companies, you could take Siemens or whoever, everything in the service sector, in the finance sector, they do have a heavy dependence on what happens in Germany. They do have a domestic dependence, and I think people are underestimating how bad the situation is for the automotive industry. And after all, the big German car producers, they do have a heavy weight also in the German DAX. And what we hear from across Germany, the mid caps
Mhm.
that are suppliers to the automotive industry, is a clear slowdown in their supplies. So it is spreading. Yes. So yes, some move out of the continent towards UK is, I think that could actually increase also in the new
Mhm.
year. Um, yeah, but we say is not so much sunshine. This conversation. Of course, we need to have these part of life as well. But for us, it confirms just our view.
Mhm.
Uh, but I think there are more surprises to come there actually. So yeah, that's the current situation. But in France, it will be a battle. It will be interesting to see the outcome. Who is forcing who?
Replaces. Mhm.
Yeah. So, but anyway, let's go to the global outlook and see if we are as happy as we normally are. Are we happy, Mel?
As far as Asia is concerned, we've always been upbeat about Asia, even with China's slowdown, China's property market concerns, and more recently, political issues that have been hounding Japan and South Korea. But as we can see from how the local assets have performed, the rebound is quite fast. So there's this optimism still among investors that while they have this initial knee-jerk reaction towards negative political developments, they are able to dial it back and see it in a more sober view and see that the long-term outlook for Asian assets are still very good. We're still upbeat about that. We're optimistic, and we still see a lot of opportunity for growth relative to, say, the Eurozone.
Yeah, we stay as normal, actually looking at the sunshine in the market. And there are clouds on the horizon, but it is for us no need to change or reduce risk further. We have done that after the Trump election in the fixed income part
Yes.
to sort of be more neutral, at least stand on the duration. But we like Southeast Asia assets, also in fixed income. We're happy for the emerging markets in general, particularly euro area. We're still underweight, as mentioned, Europe,
Mm-hmm.
and we all overweight US. We take so far we'll take the volatility as it comes. We know volatility will be higher. Um, it might open opportunities as well. Moves is equal to opportunities.
Right.
So we are still okay. Could we see some end of year reaction? We have seen some stock markets with good gains. That is, it is a risk that there might be a 5% decline in the stock market, global stock markets, until year end. Depends a bit. But we see it as more a year end effect than the markets turning around. So this is sort of our outlook right now.
Mm-hmm.
So yeah, that's basically it. We are certainly tuned in. We can assure everybody out there. Uh, but great to speak with you again, Ben.
Thanks, Peter. And thanks for our listeners for tuning in.
We'll be monitoring global developments and will share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longways Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longways Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated mutual China fund. To know more, visit longwaycapital.com.